Monday, September 19th, 2022, Maneco 64, home of alternative economics and contrarian views. So even when the FT is warning about UK economic credibility, I think you need to run for the hills. And that's what we're going to look at today. Before we start, we're going to look at a few headlines and stories that I think are interesting. The first one is about the market in general. As the FT is reporting here, market downturn sparks longest U.S. tech IPO drought in over 20 years. High growth technology stocks have been hit disproportionately hard by this year's sell-off. I think that's part of the move away from speculation, from technology, from paper assets, from financialization into real things. And it's not going to be temporary. It's going to be something that is going to be a lot more long term. So here's what the FT says. Wednesday will mark 238 days without a tech IPO worth more than $50 million, surpassing the previous records set in the aftermath of the 2008 financial crisis and the early 2000s dot-com crash, according to research by Morgan Stanley's technology equity capital arms. And yes, it's got all to do with inflation, with the fact that the Federal Reserve is having to be aggressive in trying to fight inflation. Of course, I don't think they're going to succeed. So I think things are going to get even worse. What else is going on? I just wanted to talk a little bit about the Shanghai Cooperation Organization Summit. There's a lot of talk in the West that Russia's losing support from China and countries like India. I think that's pure propaganda. I think if they really didn't support Russia, they would have called off that summit, SCO summit, and you wouldn't have Turkey trying to join the BRICS or even the SCO. So Turkey's looking to join them. Unfortunately, I think the West is desperate. With that, then let's go into the FT and the fact that even the FT is warning about the UK's economic management. It's warning about a currency event, I would say, because that's what it's all about in the end of the day. We have huge deficits, current account deficits. We have huge budget deficits. And we need foreigners to invest and put money into this country in order to keep the currency going. And this is very serious. But before I start, I'd like to look at some old sayings, because you might be asking, why does the FT matter? Well, because many years ago, back in 2004, when I had just started stacking gold and silver, I started in 2002, and I learned about what the monetary system was all about, the fact that we were under a fiat currency system, that it wasn't what I thought. It was basically an illusionary system, and that our money, so to speak, was backed by nothing. I came across an editorial in 2004. So after learning all that, and I'm still learning, of course, people, you always need to keep digging. But I came across this editorial in the FT, and I was still working in the city. So I read the FT every morning, going to work by train. And I used to like turning to the editorial page, and I was surprised by this editorial. It says, going gold, the pointlessness of holding bullion continues to sink in. And at the time, this was April 16th, 2004, I even wrote it down. The price was just over $400, as you can see here. I wrote it down, I laminated it and everything. And I've spoken about this many times. And the reason I'm showing you this is that I learned then that the FT was a mouthpiece for this fraudulent and, yes, illusory monetary system that we have. And it's not me just saying that. It's an ex-New York Fed official, John Exter, who said that after 1971, we had a I owe you nothings dollar. So when I saw this, I realized the FT is my enemy. And with that, we'll go to an old saying, because you might be wondering, so why you keep reading the FT? Well, it says here, the expression, keep your friends closer and your enemies closer, means that you need to keep an eye on your enemies. It means that you need to take the same care in watching the actions and intentions of your enemies as much as those of your friends. So I think that's very important. The other one is from a Chinese philosopher, of course, Sun Tzu. He said, know the enemy and know thyself. In 100 battles, you will never be in peril. When you're ignorant of the enemy but know yourself, your chances of winning or losing are equal. And finally, if ignorant both of your enemy and of yourself, you are certain in every battle to be in peril. So that's why I think it's really important for me to keep an eye on what the FT says. I subscribe to them, of course. Not because I like the FT, because I need to keep them closer, right? So when you have a guy like Martin Wolf, who is Mr. Globalist, he goes to Davos, to the World Economic Forum every year. And he's very anti-gold. I've never seen him talk nicely about gold. I wouldn't be surprised if he was the guy who wrote this, but they didn't put a name to it at the time. It could have been the editor at the time, but I don't know. But when he's coming out now and warning about economic policy of the new government, I think we need to, yes, take notice, because I think it's serious. And I'm not surprised, of course, because I've been warning for, well, over a year about the UK economy, and I think I've been proven quite right about it. So he says now, and this came out, was an opinion piece from yesterday, Sunday, Britain's energy package puts its economic credibility at risk. And I made a video a few weeks ago that this economic package of capping utility prices for all consumers was exposing the UK taxpayer to a massive liability. He doesn't actually mention the UK taxpayer. He mentions the government and the currency, of course. So he says the new chancellor's plan is poorly targeted, too generous, and overly dependent on public borrowing. And that's exactly what I said. But his solution, of course, is to have the same kind of plan, but targeted to lower income people, and make it more generous for them, and also tax. He says the better off, but tax the middle class. That's what he means. So his alternative isn't any better, and I think he's concerned. So I think it's serious. I think it means that, yes, there's a lot of worry. And what I said earlier in this video, that foreigners, foreign investors are really important for the UK. Yes, they are, because we're not like a big saving country like Japan or Italy, where most of the government bond buyers, like especially in Japan, are savers, Mrs. Watanabe, so to speak. Mrs. Smith in the UK is not a great saver. A lot of people have their savings, don't have much savings, and if they do, it's in property, and they're also dependent on the state pension. And yes, and we've seen, of course, the British pound go from 140 last year, now almost down to 110. It's the lowest it's been since 1985. And I spoke about it yesterday in my live stream as well, that even within government now, within the Conservative Party, there's a lot of worries about sterling. And why is sterling so important? Well, because it's the currency that we use. And you've seen what happens to countries, especially in the third world or emerging market countries, when their currencies collapse. Well, you get crises. You get social, economic crisis. You see what's going on in Lebanon. Now people are forcing themselves into banks to get their money out. You've got, when the currency drops also, the cost of living gets even worse. So here you have the government trying to protect the consumer against higher energy prices, and it could backfire completely and have the total opposite effect. And that's what usually happens when government does things. So I'm not surprised, but it looks like the FT is surprised, and that's why we need to realize that things are serious. And it should be okay for you, hopefully, if you've been listening to me, or not even, but you know these things and you've prepared yourself. You know who your real enemy is. You know that government is not really there to help you, but just to help the banks and the big corporations. We've seen now that it's okay to allow the bankers to earn as much as they want, their bonuses. But it's not okay when pensioners ask for a pay rise, when they cancel the triple lock for pensioners, which they did last year. So there you go. But he says here at the end, the UK is not the US. Well, that's true, because we don't have the major reserve currency. And I think the US is in the same boat. Yes, the US dollar is gaining right now, but usually when you have a sterling crisis like this, eventually there will be a dollar crisis. That's what's happened in the last 50 years. So UK is not the US. The foreigners who finance it have to believe it is managed by sober and responsible people. With soaring inflation and fiscal loosening, the UK is now on trial. Kwarteng's duty is to avoid it. It's being found guilty. Kwarteng, of course, is the Chancellor of the Exchequer, or the Finance Minister. So, yes, hold on to your gold and silver. Batten down the hatches. Look after your pennies. A penny saved is a penny earned. Make sure you have a budget, I would say. Know how much you're bringing in, how much is going out. And if you have to adjust your spending because of rising costs, because even energy is going from around $1,100 on average for the average household a year, utility bills, to $2,500. That's where they capped it at. And this plan is good for 2 years. So we're exposed to a lot higher prices, the taxpayer, and for companies, for businesses, it's only for 6 months. So, yeah, it's a huge mess. It's a huge gamble, as Martin Wolf actually says it in his editorial or his opinion piece. I'm going to put a link to it under archive.ph so you can read it and you don't have to be a subscriber. And before we look into the markets, just wanted to show you a long-term chart of sterling. It's actually a 200-year chart, or even more. And you'll see there's a huge spike in the 1860s. That's versus the dollar, of course. That was during the Civil War. But apart from that, sterling was pretty much, it was a measurement of gold and silver, right? The weights. And that's what all it was. So a pound was $4.88, and it was always fixed because it's a honest weights and measures. But you see here that after World War One, everything started going downhill. World War One and World War Two basically has bankrupted the UK, and we've been paying for it with a weaker currency. And as you can see, even against the dollar is going towards zero. Against gold, it's going towards zero as well. I mean, up until the late 60s, 1 ounce of gold only cost £12.50, and now we're up to almost 1,500. So this is going to continue. This is how countries or governments default. They just debase their currency. And this trend hasn't changed. If anything, it's accelerating here. I think this is the first time since the 70s where the credibility of the UK government is down in the dumps, especially when you have people like the FT and Martin Wolf questioning that credibility. So with that, let's quickly look at where the markets are this morning. It's 8:20 a.m. London time. So yeah, spot gold is down at 1662. Is down about $12. Am I concerned? No. It just gives us more chance to keep stacking, to protect ourselves. The more balances we keep in the bank, the more we're financing governments and banks. That's what you need to know. The high's been 1680. The low is 1662. So we're down about 0.75%. Silver is down 1.4%, but still way above its recent low, just below 18. We are at 1930, down about 28 cents. The Dow futures is down 0.5%, 164 points. NASDAQ 100 index is down 0.75% or 87 points. And the S&P 500 is down 22 at 3850. FTSE 100 index is down 14 points at 7220. And the Euro Stoxx 50 is down 27 or 0.75% at 3470. So let's look at the currencies. And this week, of course, we got the Fed. They're expected to raise rates on Thursday by 0.75%. And I think we've got the Bank of England as well this Wednesday. They're expected to raise rates by 0.5%. But just to give you an idea, U.S. inflation or CPI is running officially at 8.3. It's probably more like 15. And the Fed target rate is still going to go up to like 3 to 3.25. So they're still inflating because it costs, you're actually getting paid to borrow money still. So why not do it? And the same thing goes for the UK. We've got the RPI at over 12%, and the Bank of England rate is only at around 1.5, I think, or 1.75. I'm not too sure, but still being inflated. And if they really wanted to stop the inflation, they would have to raise rates to double digits, I would say, but they can't do that. So sterling continues to drift lower here. It's down 0.33% at 113.82. And yes, the drop in sterling and the euro has been kind of managed. It has been just like it hasn't been like how can I say, a very sharp and short term. It's been gradual, but quite bad. The danger here is that we could see a massive drop, like a 5% drop in one day. And that has happened before. And that's when you will know that things are not good. And I think historically, of course, this time of the year is very, very vulnerable for currency crises for some reason. The autumn equinox, and Franz Pick, who wrote a book that I've covered here many times, talked about that. So we have to keep that in mind. The euro is weak this morning as well. It's down about 1/3 as well at 99.75. Dollar's up about 1/3 versus the yen at 143.37. Dollar's up 0.4 versus the Swiss franc at 96.82. And yeah, the dollar's up a third versus the yuan at 702. But the ruble is very steady. The dollar is still around 60.2. So that's another sign that Russia still has support from the rest of the world, because if it didn't, I don't think the ruble would be doing as well as this. And that's a way to realize that the mainstream in the West is basically what they are saying about Russia. And not that I'm defending Russia, I'm just trying to see things as they are. What they're saying about Russia and its relationship with the rest of the world, non-NATO West, is wishful thinking, I would say. Let's look at the other currencies here. We've got the Aussie dollar down 0.5% at 66.86. We've got the dollar up a third versus the Canadian dollar, 133.11. So it looks like the dollar is strong all around this morning, versus fiat currencies, of course. And we've got the Kiwi dollar down almost 0.2% at 59.50. To the commodities, general commodities, we got WTI crude down 1% at 83.80. Brent is down 0.8% at 89.76. High grade copper is down 0.75% at 348.30. U.S. nat gas is down 1.2% at 768. And the Dutch nat gas futures is down 7% at 175. And to finish off, we'll quickly look at the bond market at the U.S. Treasury market. The gilt market, or the UK government bond market, is not trading today. It's a bank holiday. So the 10-year yield is unchanged at 3.46, and the 2-year yield is down about 1 basis point at 3.87. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.